please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's start India Business Hour with that happy news. India has beaten arch-rival Pakistan in the semi-finals of the Under-19 Cricket World Cup, and how to secure a spot in the finals of the tournament. Good evening. Thanks very much for joining us on India Business Hour. I'm Ranajay. Ashmit Kumar joins me in the studio. Welcome to the show, Ashmit. And what's interesting is that on Saturday, India and Australia will play together. And interestingly, both the teams at the Under-19 level have won the World Cup 3 times. Let's hope we can make it 4 in a row, man.
Well, exactly, and I would be betting on India, of course, for obvious reasons, but also keep in mind the star performers that we saw, Shubham Gill, the likes of Ishan Purell. Shubham Gill, in fact, slapped a century, an unbeaten one.
Yeah.
So it does look like a very confident side, that one that does look good, at least as far as getting the 4th title is concerned. We'll keep our fingers crossed. But with that, let's kickstart the show, and with the big interview, of course, of the day. Over to you, Ron.
All right, thanks for that, Ashmit. The day after the release of the economic survey, Shireen Bhan caught up with the author of the survey himself, the Chief Economic Advisor, Arvind Subramanian. The CEA explained his views on several issues that he has addressed in the economic survey. So let me quickly take you through the recap, the big headlines from that interaction Shireen had with Arvind Subramanian. First up is regarding the fiscal picture. The CEA made it very clear that for the government, election year does not mean fiscal populism. He added that the Modi government believes in fiscal consolidation for its own sake, not for rating agencies. Secondly, talking about the government's reforms agenda, the Chief Economic Advisor also said that there was no need for anything big, as the government has a full policy agenda for the coming year and they should focus on implementing that. Thirdly, Arvind Subramanian also shared his views on the debate for further rate cuts by the Reserve Bank, saying that the case for monetary easing is less persuasive now, as India is close to its inflation target rate. Talking about India's export picture, the Chief Economic Advisor also said that all policy levers have come into play to support exports. He added that we need to make sure the exchange rate is supportive for exporters. Last and not the least, the Chief Economic Advisor also talked about reduction in the 29% GST basket and expressed confidence that there was scope for further GST rate rationalization. Let's take you through some of the highlights of that big interview.
You very publicly advocated for lower interest rates. You've pitched that to the Reserve Bank publicly several times over. But now you believe that the cycle has turned. What does that mean? Are we going to see an extended pause, or is the possibility of even a rate hike now more imminent?
See, I think that I will go so far as to say that relative to the last 18 months when we consistently undershot our inflation target, now we are at or close to that. So clearly the case for easing is now less persuasive. But now, you know, on current policy, we seem to be close to the inflation target. So, you know, I would think that we're about right here.
You have made the pitch for not being overly ambitious as far as fiscal consolidation targets are concerned, to ensure that credibility is retained, given the fact that we're in an election year. But why make the case for fiscal slippage, given the fact that you believe that on whether it's direct taxes, personal income tax at a historic high of 2.3%, which is what the survey points out, or even GST, which, you know, the survey highlights is looking much more robust than was estimated or anticipated, given the fact that you see growth improving, then why build the case for fiscal slippage?
See, I think maybe just factually to correct things, if you read the fiscal slippage that I said was for this year, for 17-18, right? And there, remember that the Secretary has said clearly and publicly what the market borrowing for this year is going to be, and you know, markets have taken that into account, and that's going to be the fiscal outcome for this year. That may involve a bit of slippage, may not, we'll have to see, but that's for this year. For next year, what I've said, 3 things, very clear. One, the fact that it's an election year does not mean fiscal populism, and I think everyone is on board. No fiscal populism. Second point made very clearly is that if you look at the pure economic cycle now, you would, in principle, and I would argue for an ambitious fiscal consolidation on economic grounds, because inflation is higher, output is higher, output gaps are closing, there's more volatility and external uncertainty, therefore consolidation. But between saying that you should not have populism and saying you must completely ignore political reality, I think there's a middle ground saying, yes, we must have fiscal consolidation, but it may have to some extent take account of where we are in the calendar. And what that means is that, yes, consolidation, but how much is the question?
Okay, so if you're saying that we need to root ourselves in political reality, we are in an election year, but that doesn't necessarily mean fiscal populism, then what does it mean exactly?
It means, see, remember, I have always argued even on the FRBM committee, that steady, this government believes in fiscal consolidation for its own sake, not because of ratings agencies and so on. And what India's fiscal policy, I think, demands is steady reductions in both the debt and the deficit. So that would be what I think government should aim for.
3% is what the target is for next year, for FY19.
According to whom?
Well, that was according to the budget last year. So for FY19, it's 3%. Do you believe that we are going to be able to stick with that, or do you believe that 3.2, which is what the markets are factoring in at this point in time, would be the modest, credible fiscal consolidation plan that you're talking about?
I think, first of all, you'll find out in a couple of days, and also depends upon where we're starting now. So let's see how we turn out. The suspense will have to hold for next 36 hours now.
Okay, let me then talk to you about investments as well as exports, because I think these are the two themes that you talk about or spend a lot of time in the survey talking about them, and you believe that both of them are below takeoff speed at this point in time. What is it going to take to boost investments? Recapitalization, yes. What happens as far as the NCLT process is concerned is another uncertainty that we need to deal with. But outside of that, is there need for fiscal intervention to boost investments?
See, one very strong message I have is for this year, for the coming year, is that there is already a full policy agenda that requires completing a lot of things that government has already done, and that you don't need anything big and new and radical.
Okay. All right.
I'm not saying this as a kind of defense of anything. I think, if we can support agriculture, if we can, because remember, resolution and recapitalization have just begun.
Yeah.
We have to finish that.
Yeah.
If we privatize Air India, right, stabilize the GST, which is, still a few things, kinks need to be ironed out, and if we head off macro pressures, I think that's a very ambitious agenda. You don't need to do a whole lot extra to get to the growth forecast that we have in the survey.
You talk about the decoupling that we've seen, and you hope that now we will start to participate in the global recovery, which is getting stronger and more secular and broad-based every day. Is there a need for export-led incentives? You ask that question in the context of the textile package that was given. This is an ask of the Commerce Minister. Do you believe that that's the need of the hour today to boost exports?
See, I think that, first of all, with the world, already first 9 months, we're doing about 11.3% manufacturing export growth, which is completely healthy and in line with what other Asian countries are doing. Next year, world growth is going to be higher still, so we should, just on these grounds of external demand, expect to see higher export growth. Whether we need to supplement that with further action, sure. I think that the clothing package had some important lessons. I think the government is extending it to some other sectors. I think the other thing that we've highlighted is the exchange rate. I think we have to make sure that that's supportive of the economy as well. So I think between...
How much of that is a challenge? Because you talk about how it's gone up 21% in the last 3 years, and that is hurting the export sector. But, the government says that we have a hands-off approach when it comes to the currency. So what do you do about that?
Yeah, I mean, that's for the RBI to decide. But I think all of us can work together to ensure that. I think it's not as if the RBI is unaware of the impact that it has on competitiveness. So I think all policy levers, depending on who's manipulating which lever, have to come into play to support exports. But the point is that there is a base of healthy demand, which wasn't the case a year ago or a couple of years ago, to build on. And I think there is a case we should be galvanizing capitalizing and harnessing that demand momentum.
On the GST, I mean, you have reiterated the call for a single rate with a revenue neutral rate of about 15 to 16%. I mean, the mood is unlikely to go forward with a single rate of tax, even in the near future, maybe 3 to 5 years. But do you believe that the inclusion of things that are so far excluded from the GST, that's a much more realistic expectation to have?
I think both are on the agenda. I think, electricity, petroleum, real estate, I mean, are on the agenda, will be on the agenda. But that doesn't preclude us from considering also simplifying the rate structure.
Has that gained any currency? Because, the finance minister continues to maintain that in a country like India, you can't have a BMW and milk, for instance, being priced taxed at the same rate.
But look at the evidence so far, right? That the 28% rate, which we all agreed was too much, we've made big, progress on that. The 28% rate has now shrunk. So I think there is scope for, improving the rate structure. And the GST has been in operation for less than 6 months. I mean, and I think what has been, creditable about the system is not just that we've done it, but that we've been able to respond to whatever glitches and challenges that have emerged. And that's how a system should be.
Let me end then by asking you about the pink cover. And I heard you say that you got a lot of social media flack for it. I think it's unfair, because I think it is time for us to actually mainstream this conversation. But I can understand the sentiment because of the current environment. You said that there is a need to awaken our conscience as a nation around these issues. What bothers you the most about this today?
See, I think there are many things that I think we made progress on, a lot of indicators. But maybe at the heart of it is that Indian society, values boys over girls. And that's maybe the heart of the problem. And that's what we try and highlight in the survey.
Is there a policy answer to being able to correct that?
I think it goes back at least 3,000–4,000 years, and I think so. I'm not sure what one policy lever I can find to change 3,000 years of history.
Well, that was Shireen in conversation with the CEA, who's confident that there will be more buoyancy, the growth will return. However, that narrative served by the government did come in for a fair bit of criticism from key opposition leaders. In fact, former Finance Minister P. Chidambaram has launched yet another attack at the government ahead of the budget, speaking at the launch event of his book, Speaking Truth to Power in the national capital. The former Finance Minister said that the economic survey is a confession that the government has failed to tackle challenges of employment, education and agriculture. That's not all. Chidambaram also asserted that Congress and the other opposition parties will pose a formidable challenge to the BJP in the year 2019. Chidambaram also hit out at the government for propagating the one nation, one election idea, slamming it as a jumla. He said it was not possible to have simultaneous assembly as well as Lok Sabha elections unless the constitution was amended. Take a look.
A CSDS survey, which is usually authentic, the very good methodology, they have said number one concern of the people of India is jobs today. If you are creating 75 lakh jobs in the payroll sector, why should that be the number one concern? It is the number one concern of the people of India. It is the concern which drove Hardik Patel, Alpesh Thakur, Jigesh Mebani to be able to mobilize their supporters. You may dismiss it as caste mobilization. Yes, caste is a convenient tool to mobilize. But the real driving force behind that mobilization was this cry for jobs. If everybody had jobs, nobody will mobilize and come to the street. You will watch that happening. If jobs are not created, look at the economic survey. It's an utter admission and a confession that after 4 years of government, they have failed to deal with three major issues: employment, education and agriculture. If a government fails to deal with employment, education and agriculture, what has it dealt with then? Don't write off the Congress party, don't write off the ability of the people to join hands in defeating BJP candidates in specific constituencies. Wait for the Rajasthan election and wait for the Madhya Pradesh election. At the moment, you will say that we don't have an organization which is powerful enough to take on the RSS. But we didn't have one in Gujarat either. So I think it's coming together. If we can quicken the process, we can make it stronger, but I'm absolutely confident the process will come together and we will pose a formidable challenge to the BJP in 2019 or whenever elections are held. Constitution of India does not give a fixed term to any government. So unless you amend the constitution, you cannot have simultaneous election. Germany has elections in states at different times. They have a national election, and Germany's provinces have elections at different times. They had one 2 months ago, they had one 4 months ago. So in a parliamentary democracy, especially when we have 30 states, in a parliamentary democracy, under the present constitution, you cannot have simultaneous election. You could artificially construct an appearance of a simultaneous election by preponing some, postponing some. But you can do that maybe with parliament election in 5 or 6 states. How can you do it for 30 states? No state government, central government has a fixed term under this constitution. And what if a government falls tomorrow? Will you put it under president's rule for 4 years? It can't be done. This is another of these election jumlas. No, one nation, one tax was a jumla. Now one nation, one election is a jumla.
If you want one nation, one election, then change the constitution. That's former Finance Minister P. Chidambaram. Remember, just a couple of days back, even President Ramnath Kovind made a pitch on similar lines. On to the big CNBC Tv18 KPMG mega pre-budget poll. Shireen Bhan now standing by to take us through some of the interesting findings of that mega survey. Shireen, over to you.
Tax us more, but not our companies. That is the clear message from India Inc. to the Finance Minister, with just a few hours to go before the Union Budget is presented. CNBC TV18, in partnership with KPMG, has carried out an extensive pre-budget survey across India Inc. Now, nearly 300 senior finance professionals from over 15 sectors were polled with questions on their budget expectations. The results are revealing, to say the least. Here is the biggest revelation. 74% of the CEOs polled support additional measures on ultra-high income earners. 74% there. This is basically those who earn more than 5 crore rupees per annum. Only 26% are against any such measures. There is already a 15% surcharge on those earning more than 1 crore rupees. But let's now talk about corporate tax. A majority, that's nearly 55%, expect the government to cut the tax rate. Another 39% expect a status quo. Not just that, 80% of the CEOs polled expect personal income taxes to go down, with only 17% expecting income tax to remain unchanged. So again, a majority there believes that there is a cut coming as far as personal income tax is concerned. Of a majority of nearly 62% of CEOs polled expect the minimum alternate tax or the MAT to remain unchanged. Now, what do CEOs fear the most? 62% of India Inc. believes that long-term capital gains tax on equities has emerged as the biggest apprehension. Will this budget take it forward or not? That's the big question. The next question, has the government's measures provided tax certainty? Only 13% of India Inc. say the government measures have in fact provided tax certainty. Over 49% of India Inc. say the government has a long way to go in providing tax certainty. But at the same time, when asked if the tax environment has improved in the last 1 year, a majority, that's nearly 68% of the CEOs polled, said yes, there has been an improvement in the tax environment in the past year. 32% said no. Well, joining us now to discuss all of this is the team at KPMG behind this survey. Arun Kumar, the chairman and CEO of KPMG India, Sachin Menon, partner and head of indirect tax, and Hitesh Gajaria, who's also a partner at KPMG. Gentlemen, thanks very much for joining us here on CNBC TV18. Mr. Arun Kumar, let me start by asking you about what is the biggest revelation as far as this CEO poll is concerned. Most CEOs, a majority of the CEOs polled, believe that there should be more measures to tax the ultra-rich, not so much on the companies, but on the ultra-rich. Our source is telling us that perhaps an inheritance tax or an estate tax is unlikely in this budget. But the poll seems to suggest that India Inc. is ready, even if that were to be the case.
I'm not sure that should be such a surprise, because around the world, you'll find that business leaders are in favor of taxation that's equitable. And having a higher tax rate on the ultra-rich is very much an equitable measure. So it's not so surprising to me that that was the result of the survey.
Okay, you're saying that that was not surprising to you, but Mr. Kumar, let me ask you, what if the government does decide to go in for any measures now to specifically target the ultra-rich? We've already got that surcharge on people with an annual income of more than 1 crore rupees. What is the expectation?
Now, I would
if
say,
not an inheritance tax or an estate tax?
Yeah, on the expectation, I would leave that to my colleague Hitesh Gujaria to guess on that. But broadly, I would say that our survey showed that most people felt that personal taxes will stay the same or will decrease, with the exception of the ultra-rich as it was characterized.
Okay, Hitesh, so you want to take a stab at that? What would, if the poll is suggesting that people are bracing themselves for more measures, specifically when it comes to the ultra-rich, what are you expecting?
Well, we can take a leaf out of what UK did 2 years ago. They introduced a top rate of 50% on all incomes over a certain threshold. I believe that threshold was over £500,000. If the survey is anything to go by, then many people are expecting that those earning incomes of more than 5 crores could possibly end up paying a higher tax rate of not 30%, but say 40%.
Okay, so that's the expectation. Those with incomes of higher than 5 crores could end up with a higher tax on them. But, Mr. Kumar, let me come back to you now and let me extrapolate this argument to what the poll is suggesting on the corporate tax front. And the expectation is, look what's happening in the US. India needs to move and reduce corporate taxes. And that was the stated objective and the promise made by this finance minister when he came to office. Majority still believe that the finance minister will cut the corporate tax rate down to 25%. In light of what we've seen from the economic survey and other commentary from the government, are you hopeful?
I believe I am hopeful because there are also international factors at play. For example, the Trump administration's decision to reduce corporate taxes significantly to 21% is going to be a competitive factor. So we are in competition for investment with other countries, including the United States. So in general, I believe that it is a competitive issue for us in India to address the corporate tax rate. Remember that the Indian companies will have to make decisions in terms of where they invest.
Yeah.
And clearly, India needs to be attractive for Indian companies to invest as well as for foreign companies. So today, a US company needs to decide whether they invest in India or decide in the US. The change in the corporate tax in the US tilts the advantage in many cases towards the US. So it's important for that issue to be addressed here.
The poll shows that people are very apprehensive about the introduction or a reintroduction of the long-term capital gains tax. But I ask you this in the context of what we saw from the chief economic advisor in the economic survey, talking about the possibility of a stall or a capital outflow from the Indian stock markets. One, because valuations are not justifiable. So do you believe that given where the markets are today, that we could expect any intervention by way of a long-term capital gains tax to upset the party, Mr. Kumar as well as Hitesh?
So my take on this is, my take on this is really that the government perhaps should not introduce this capital gains tax at this juncture. If we will see the last budget as well as I would expect in the current budget, disinvestment to take of proceeds to be a lion's share of revenue for the government. If it wants to keep its fiscal deficit in check, then perhaps this is not the appropriate time. Given that the market is good, the government has a golden opportunity for disinvestment, and the capital gains tax introduction at this time would just spoil the party.
Gentlemen, I now want to focus on what the survey shows up in terms of individual taxation. 93.3%, a whopping majority believe that there will be additional relief provided to individual taxpayers. Mr. Kumar, we are calling it the election budget here on CNBC TV18. This is the last full budget ahead of the 2019 general elections. So the salaried class is expecting relief. What would your expectation be?
I would expect that at a time like this, the salaried class would expect relief, and that relief would probably be very good for the economy. More money in the pockets of the salaried class can keep the consumer spending up. So I would expect that to be a positive move for the economy.
Okay, Hitesh, let's talk about specifically what we can expect. Reintroduction of the standard deduction for salaried employees, about 22% believe that that is what we're likely to see. An increase in the income tax slab limits, 46% believe that that's what we could see. Increase in the maximum limit of income not to be considered taxable, about 32% believe that that could be what the budget provides. What would your best guess be, and what kind of changes do you anticipate?
So my best guess would be that the finance minister is more likely to increase the threshold slab rate of 2.5 lakhs, which has been there for quite some time. Yet another trend which I believe, though not apparent in the survey, is
to
that
3 lakhs? What would the expectation be? So 2.5 to 3?
Yes, 3 I think is a fair expectation, which would not also compromise interests of the revenue so much, but would really provide a feel-good factor. Okay. Secondly, ATC limit, the investment incentive exemption limit, you know, of 150,000 is now very, very old. Most investments now, including, you know, life insurance or let's say investment in mutual funds, etc., need to be incentivized. The provident fund rates also are going down in line with the general inflation. So I would expect even that to be substantially relooked at. Even there is a case to bring that up to 3 lakhs of rupees.
So that's a significant jump that you anticipate from 1.5 lakhs to 3 lakhs in terms of the ATC investment-linked incentives that you talk about. Any changes in the tax slabs that you anticipate?
So in the tax slabs, I would expect that if the wishes of possibly, or the anticipation of possibly a majority people come true, that is introduction of a, let's say, super high rate of tax on the super rich were to come through, then clearly there is a case to extend the 5% basic slab rate, which was introduced last year, to as high as, let's say, 10 lakhs of rupees, and then have a progressive increase in the tax rates going up over 10 lakhs.
What's the possibility of that? There's a lot of buzz around this theme and this idea, Hitesh. Would you think that they will bite this bullet?
Well, I think time is certainly right. If I were to just pause back a little, you know, reflect back, today really the government in the demonetization move has rightly did cause collateral harm, a bit of hardship to the average citizens. This is the final budget in which the government has to woo these taxpayers, these honest taxpayers, more salaried earners than anyone else, who will pledge their full support to the government, and therefore there has to be meaningful relief. Giving 10 or 15,000 here or there by way of some increase in limits, etc., is not really going to cut the cake. And therefore, I believe this is a time to redeem that pledge that the government is all for the honest taxpayer and is encouraging honest taxpayer behavior.
We're counting down to Budget 2018. Finance Minister Arun Jaitley will present the budget on the 1st of February, and you can catch the action right here on CNBC Tv18. We're going to be live through the day.
Well, thanks very much for that, Shireen, for taking us through that conversation. Who could have thought that 74% of CEOs would actually bat for a higher tax on those earning 5 crore rupees or more? Remember, there's already a surcharge on those earning 1 crore rupees and more. That was introduced by former Finance Minister P. Chidambaram.
Well, a very good evening and welcome back onto the day's trading action now. Dragged by weak global cues, the Lal Street witnessed a decline today. The Nifty ended just shy of 11,050 points, and the Sensex also lost about 250 points to close just above the 36,000 levels. The mid-caps with high debt saw a bigger fall. That index ending with the cuts of about 0.4%. The Bank Nifty also following suit, ending more than 200 points in the red. That's, of course, as far as the local market is concerned, the Lal Street. Ron, how about the global markets?
A lot looking too good, my friend. Let's take a look, and we'll have the numbers there up on your screen in just a while. The global markets are faring right now, and the US markets are trading in the negative territory. And this, remember, is the second day in a row. Both you can see S&P 500 there down by about 20 points. NASDAQ is down by almost 65 points. So clearly the commentary that came in from the Fed of possibility of the interest rate going further up still weighing in on the stocks today. The key indices trade in the red as investors monitor fresh economic data. Let's also get you how the European markets are trading. All three actually, FTSE, DAX and the CAC are trading in the red currently with cuts of about 0.4%. That's as far as CAC is concerned. We'll also have the crude prices, and they continue to plummet for the second day in a row. A stronger dollar, coupled with a rise in American output, has seen the crude slip below the $69 per barrel mark for the first time in 6 days. So some relief, perhaps, for Indian policymakers. It's always good news for India when the crude dips lower. But remember, it's still quite high. It's still trading at almost 69. Meanwhile, the government today notified the issue of dated government securities, commonly known as recap bonds, worth 80,000 crore rupees. Public sector banks can now essentially subscribe to these bonds. Their subscription will, however, depend and be limited to the amount that's been allocated to them. For more on that, Lata Venkatesh now joins in to take us through the broad contours of the recap bonds. Lata.
The government has announced the details of the recapitalization bonds, which it said it will issue to capitalized banks. Remember, 80,000 crore of recap bonds were to be issued. Today, they told us that they're going to be issued in 6 lots. That is, some of them will be 10-year bonds, some of them 11, 12, 13, 14 and 15-year bonds. Now, what will be the interest paid on the bond? The interest is exactly as the interest of the corresponding bond that is trading in the market today. So the 10-year bond has been couponed at 7.35%. That is exactly the yield at which the current 10-year ended in the market today. So they have aligned the rates to the market rates of the corresponding security. A third feature of this bond is that it is not transferable. You cannot buy and sell those bonds. Banks which get those bonds according to their quota will have to just lock it up, which is a relief for the bond dealers because it will not come in and flood and bring down prices. You know, oversupply of anything brings down the price. A fourth important feature, which is which was key for the bankers, is that this will be included in what is called the HTM category, or held to maturity. Now, why is this important? If something was not held to maturity, but was held as, you know, outside that, if the prices of the bond falls in the market, like the 10-year bond price falls, then you have to mark the price down for this bond as well and provide for that loss in your books. Bankers didn't want that uncertainty. So now the government has said these can be classified under HTM, which means they're just held up till the day of maturity, and they will not attract provisioning at the end of every year, mark-to-market provisioning. This also comes as a relief for bond markets. I mean, this will be a non-issue. It's a non-disruptive way of issuing bonds. For bank shares, my sense is tomorrow you might see the shares rise because bankers were not very sure whether all these features will come. The features are exactly as the bankers wanted it. They will not have to have any provisioning or mark-to-market losses because of these bonds. So chances are that tomorrow you may see a minor uptick in public sector bank shares.
Many thanks for Lata for taking us through those intricate details of the recap announcement that came earlier today. On to an exclusive now. Sources telling us that the government has withdrawn its plea from the NCLT to pursue Unitech takeover. Ashmit, you've been tracking that case, so it seems like a U-turn by the government. Is my understanding right?
U-turn, and one would say a U-turn within less than 60 days. That appears to be the situation. Now, the government, as we know, went hammer and tongs after the company Unitech. They made their position very clear that, and this is as of November, where they clarified their position that they believe there has been gross mismanagement, that there has been diversion of funds, and on account of that, they filed an application before the NCLT, essentially seeking to take over the company's operations. They were seeking for nominating members as far as the Unitech board is concerned. In fact, the NCLT went a step further, paved the way for doing so, disallowed the board of Unitech, allowed room for the government to nominate as many as 10 members. However, Unitech councils had brought that to the attention of the apex court. The Supreme Court, however, took exception to that. The Supreme Court said that we're already seized of the matter. There is no need for the government to pursue alternate remedies, and that appears to be the reprimand that seems to have made the government shift its stance. The government clarifying that as of this stage, given that the Supreme Court is seized of the matter, they will not pursue it any further, and to that extent, they have withdrawn this application that was pending before the NCLT. Having said that, also important to mention for the benefit of our viewers that even as we speak, the Supreme Court is indeed hearing applications by various home buyers against the company Unitech, and Sanjay Chandra, even as we speak, is still behind bars in Tihar jail. The bail has been pegged at 700 150 crore rupees. The company so far has coughed up a sum of about 18 crore rupees. But that's not all. Speaking of legal action coming in, well, we've learned that Videocon Industries is bracing for a legal tussle with the Reserve Bank of India. The company has decided to challenge the RBI for sending it to the National Company Law Tribunal. Sources tell us that Videocon Industries has filed a writ petition in the Bombay High Court seeking a stay on insolvency proceedings. Ritu Singh now joins us. Ritu, Videocon appearing, from the look of things at least, does appear to be following suit as far as Jaiswal Nico is concerned. They've set a similar example. What is the Videocon company's challenge as of this stage all about?
That's right. Tomorrow is actually an important day with two cases coming up, not just Videocon Industries, but also Jaiswal Nico, both of which we understand have challenged the Reserve Bank of India for sending them to the NCLT under the Insolvency and Bankruptcy Court proceedings. Now, what we understand is that Videocon is challenging RBI's order for the company to be sent to NCLT, or directing banks to send the company to NCLT under the basis of the fact that they claim their business financials were impacted because of a change in an import duty structure and therefore was completely out of their hands. The second thing that the company is arguing is that they had already presented a plan to bankers to repay a portion of that 43,000 crore debt by offering to monetize their land parcels across the country and raising 10,000 crores by doing so, and another 3,000 to 4,000 crores in the year subsequent to that. And that was the plan that was presented, and therefore there was no need for the company to be taken to NCLT. Of course, the RBI lawyers could argue that the company was an NPA for 1 year and was then given another 6 months to find a resolution, but no such resolution was reached, and therefore the banks and the RBI had their right to take the company into the NCLT. But as I said, the hearing is tomorrow, and that is the important day to watch out for. We'll bring you all of the updates from both of these two important cases in the RBI's defaulter list.
All right, Ritu, let's leave it at that. Many thanks for joining in with those details. On to the auto space now. Hero MotoCorp is all set to shake up the premium motorcycle segment, or so it hopes, with its Extreme 200R offering. More details when we return.
Welcome back once again onto a CNBC Tv18 exclusive now. Central Government's Infra Committee met today to discuss some critical issues. The meeting was led by Road Minister Nitin Gadkari. Harshpreet Sethi, who was tracking that meeting, now joins us. Harshpreet, clearly there was representation from various ministries at this point. What were the key decisions taken, if any, and what are the broad takeaways at this stage?
Yes, the meeting that had taken place today was the 6th meeting that was held between different infra ministries, which includes your telecom, railways, road and highways, and even the power ministry. Now, the ministers that met today have taken a call that a panel will be which will be led by the telecom secretary, will look into all infra-related issues as far as overlap of using infrastructure or the space is concerned. Now, remember, a lot of ministries are dealing with projects where they share different kind of infrastructures, which includes your cable lines, telecom towers as well. So as far as that part is concerned, the ministers have decided that all these ministries will be signing pacts as far as sharing of infrastructure is concerned, and how they will not charge each other if they are sharing that place. In fact, there were also discussions as to how land clearances and environment clearances has been a big issue, and as to how 12 highway projects will have to get clearance from the MOEF at the earliest. So these are the basic issues that have come out. The 7th meeting, of course, will be held next month. We'll have to wait and see what will be the agenda that deals.
All right, Ashpreet, thanks very much for those details. On to the auto space now. India's largest two-wheeler maker, Hero MotoCorp, is set to re-enter the premium motorcycle segment. The two-wheeler giant has unveiled a new 200cc motorbike, the Extreme 200R, which will be taking on Bajaj Pulsar 180 and the KTM Duke 200. The new offering is expected to hit the markets in the next few months. Earlier today, I caught up with Hero MotoCorp's head of global product planning, Maloli Mason, and the chief technology officer, Marcus Bronsberger, to understand how the company will be actually going about breaking the stranglehold of Bajaj and Royal Enfield in the premium segment.
2017 was one big chapter that we closed, which is about the renewal of our core commuter offer. 2018 should be basically when we look at new segment offer where we're not present. And the first foray is actually in the premium, most importantly. And when we talk about the premium, as we described, the biggest chunk of the market in terms of volume is actually below 1 lakh extra room. And this is where we found out that there are a sweet spot for people that want a bit more performance compared to what is offered today, yet still remaining, let's say, accessible or affordable.
This product will be sandwiched between a very successful Pulsar 180, you've got the KTM Duke 200. So, I mean, how distinct, what will be the USP of the Extreme vis-a-vis when you see these two strong incumbents that are already there?
First of all, we do offer in this air-cooled segment the peak performance in terms of horsepower as well as the torque. So the overall package is, in terms of performance, very competitive.
You know, the last time at Milan, when we had all met, and I had spoken with Pawan Munjal at that point, and I had asked him that, again, from a branding perspective, how do you sort of, reconcile selling a Splendor and a higher CC motorcycle under the same showroom? And that's when he said that, yes, we may have to now start thinking of a exclusive sort of a retail arm.
Yeah.
Any update, Maldo? I mean, is there anything more that you can maybe throw some flavor, color to that?
Yeah. And let's say the work has already been started. And, it's always the chicken and the egg, because you want to basically upgrade your capability, but at the same time, you would have people that would say, okay, what is the trigger? The trigger is a range of premium product that we want to launch. And just as Marcus said, this is just the beginning. And one of the first trades that we want to look is looking at experience centers. So putting some key experience centers, some example of what should be, let's say, the hero showroom of tomorrow.
Well, clearly competition heating up in the performance bike segment. But from automobile to the aviation space, Vistara, the joint venture between Tata Group and Singapore Airlines, is weighing its option to enter the race for Air India. That's the word coming in from the CEO of the airline. In a conversation with CNBC Tv18's Utkarsh Chaturvedi, Vistara CEO also talked about the airline's plans to go international. Here's an excerpt of that conversation.
We will have 20 aircraft by the end of March, which means that we will then be eligible for international operations. So that is our focus at the moment, to go international as soon as possible.
At this point of time, which are the areas and which are the sectors are we really looking at? Are these the short-haul flights at this point of time? Which areas are we looking at when it comes to the international market?
For 2018, we will have about 22 aircraft. So the 22 aircraft that we have are all the Airbus A320, a mix of CEOs as well as NEOs. Given the aircraft that we have, we are looking at the range that the aircraft can fly. It is likely to be regional short haul that we will be starting with our international operations.
What is it which the aviation industry is really looking at as a push from the government in this union budget?
I think from the budget, for all businesses, including aviation industry, would like to have a lower operating cost. I think from the aviation industry, we have been lobbying the government to try to let ATF come under GST.
Given the fact that the Tatas have gone ahead and said that they are interested in Air India, is it that through Vistara we can really look at a joint bid from Tatas for Air India?
I think we have said the option is open. We have not made any commitment on that.